Today's Talk About It Tuesday question is, I saw a video that said that the rich use a strategy called buy, borrow, die to live off of borrowed money in order to avoid taxes because debt cannot be taxed. What are your thoughts on this technique? Okay, so I have to say the person sent me the video that they watched, and I also looked at a couple of other videos that were entitled the same thing. All right, where do I start? So let's start with the concept, and then we'll talk about theoretically how it could work, and then we'll talk about practically whether it works or not. So here's the concept. Buy, borrow, die. So in the video, they explain that the rich buy massive amounts of assets, and they referenced index funds, which anyway, so let's just say they have a portfolio of stocks or securities, and they have maybe some real estate, and they have some other assets. So assets, we know, are things that have value. And the concept is that they collateralize the assets to get loans based on the value or the equity in the assets. They then take and they say they get low interest or interest only loans to keep the payments low. And they take the borrowed money to live their life the way that other people would live their life from earned income. And they avoid taxes on it because it's borrowed money. There is no tax on borrowed money because it's not considered income. That is absolutely true. And then they said to avoid ever having to pay off the debt, they put it in a trust, leave it to a beneficiary, and die. And then, because of a thing called stepped up value, meaning even the beneficiary can sell the asset and avoid capital gains tax because they received it at the value that it was at when I died, and they sell it at that value, so there are no capital gains, so they avoid capital gains tax and pay off all the debts that I incurred while I was alive. So theoretically, that makes sense. It can happen theoretically. But let's talk about practically. Okay, so assuming I was able to acquire all these assets, first of all, I needed income to get the assets, but I get all of these assets, and then I borrow against them. So now I've been teaching for the longest time that there's a difference between good debt and bad debt. So good debt is what we call leverage. Bad debt is just bad debt, meaning when we borrow from an asset, we pull the value out of an asset and we use it for consumption, for consumable items, for things that depreciate in value, for things that don't service the debt. That's bad debt, because all it does is degrade the value of the asset. It depletes the equity of the asset. Now, it is unsustainable to do that because you still have to pay something, even if it's low interest, even if it's interest only. You need money to pay that. You have to service the debt somehow. So are you going to keep borrowing from other assets to service that debt? You're going to rob Peter to pay Paul? You're just going to have circular debt? Eventually that runs out. And then what? Then you end up losing all the assets, because if it's a property, they foreclose on it, or they repossess it, or whatever the case is, or you get sued and there's a judgment against it and you're forced to sell it, or they take it. That is an unsustainable thing, because how many years can you do this? I don't care how many assets you have. If you're going to live off of the borrowed money, how does the money get back into the asset, right? How do you pay off the debt? So how many years can you pull that off before you have massive debt and then you have to start selling, or you have to start getting your stuff taken from you in judgments and foreclosures. That doesn't make any sense. That is 100% unsustainable. So you would need some income to be able to pay that off. You need income to pay it off. So are you saying they're income producing assets that you're only using income producing assets? Either way, it's unsustainable because you're going to be pulling out more than you can put back. I'll tell you why it's foolish anyway. When you're saying avoid taxes, there are no taxes on unrealized gains. So if all of your money was already in assets and you didn't have income, you don't pay taxes on that anyway. So as a tax avoidance strategy, you're not paying taxes on the assets unless you sold the assets, and then it's capital gains. You need some income. The trick, and listen to me, I have one of the best tax strategists in New York, and I'm around wealthy people all the time. You will never hear a wealthy person say this is a good strategy. It is not a good strategy because it's bad debt, it's not leverage. It is a terrible strategy that degrades the value of the assets. And then they say you put it in a trust. Once you put it in a trust, it's not yours, by the way. It's for the benefit of the beneficiary. But you just wiped out intergenerational wealth, even if you could pull it off, because all you did was kick the debt down to the next generation, and now they have to sell the assets to pay off your debt. That's not a very good strategy. So I've never heard, again, the people in the videos weren't wealthy people. These were people who either spoke to wealthy people or were some type of wealth strategist or tax strategist. That is a horrible strategy. It is unsustainable. Rich people don't do it. That TikTok stuff is going to get you guys in trouble. It doesn't work. There are a lot of missing pieces in here. So what do I think of it as a technique? I don't think it's a real technique, first of all. And if you were trying to employ that, I think it's a horrible technique that's going to diminish your wealth, because when we talk about net worth, it's the asset value minus your liabilities, your net worth. All you're doing is depleting your net worth and probably putting yourself in a negative net worth. That's not how you become wealthy. That's not how you create intergenerational wealth. That's a bad strategy for tax avoidance. So my thoughts on it: 2 thumbs down, terrible. Don't even think about it. So I'd like to hear your thoughts on it. Please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.